You are watching the largest military operation in the Western Hemisphere since the 1989 Panama invasion unfold right now, and while your government tells you this is about drug trafficking and democracy, the United States launched Operation Absolute Resolve on January 3rd, 2026, capturing Venezuelan President Nicolas Maduro. And what you're actually witnessing is the most desperate resource seizure in modern history, a $38 trillion debtor nation making its final play to control 303 billion barrels of crude oil, about a fifth of the world's global reserves before the mathematical certainty of currency collapse destroys everything you've worked for. This isn't a military operation. This is stage 4 of the economic pattern that has destroyed every empire in human history. And you are living through the resource confiscation phase that always, without exception, precedes total monetary system failure. Let me be absolutely clear about what just happened. President Donald Trump said the U.S. would take control of Venezuela's massive oil reserves and recruit American companies to invest billions of dollars to refurbish the country's gutted oil industry, which means the United States government drowning in $38.43 trillion of debt as of January 7th, 2026. Just executed a military invasion to seize physical assets because the dollar system is collapsing, and they need anything of real value to back a currency that is mathematically guaranteed to fail. This is not speculation. This is not conspiracy theory. This is historical pattern recognition. And if you understand the 4-stage economic cycle that I'm about to explain, you'll realize that everything happening right now, from the Venezuela operation to the prices you're paying at the grocery store, is following a script that was written thousands of years ago and has never once deviated from its conclusion. The mainstream media will not tell you this. Your financial advisor will not tell you this. Your government certainly will not tell you this. But the mathematics are undeniable, the historical precedent is absolute, and the triggering event that will cascade into full systemic collapse is already in motion. Here's the 4-stage pattern that every civilization has followed without exception. And I need you to understand exactly where we are in this cycle, because your financial survival depends on recognizing what comes next. Stage 1, sound money creation. A rising power establishes a currency backed by real value, typically gold, silver, or in the modern era, oil and military dominance. This creates trust, enables trade, and builds prosperity because people believe the currency represents genuine wealth. The Roman Empire did this with gold and silver coinage. The British Empire did this with the gold-backed pound sterling. America did this from 1944 to 1971 with the Bretton Woods system, where the dollar was backed by gold at $35 per ounce, and every other currency was pegged to the dollar. This is the foundation phase, where empires are built on productive capacity and honest money. Stage 2, imperial overextension and currency debasement. The dominant power, confident in its strength, begins printing money beyond its productive capacity to fund wars, social programs, and consumption that exceeds what it actually produces. Rome did this by reducing the silver content in the denarius from 95% to less than 5% over 2 centuries to pay for endless military campaigns on the frontier. Spain did this after discovering New World silver, flooding Europe with debased currency to fund religious wars. Britain did this financing 2 world wars that bankrupted the empire. America entered this phase in 1971 when Richard Nixon closed the gold window because France and other nations were demanding to exchange their dollars for the gold reserves at Fort Knox. And America simply didn't have enough gold to honor those claims, so instead of admitting bankruptcy, Nixon severed the dollar's connection to gold and began the 55-year experiment in pure fiat currency that is now ending. From 1971 to 2008, America printed money to fund the Vietnam War, the Cold War, the War on Terror, Medicare, Medicaid, Social Security expansion, and a standard of living far beyond what the nation's productive capacity could support. But the petrodollar system absorbed this excess currency by forcing every nation that needed oil to hold dollars, which created artificial demand and delayed the consequences. Stage 3, loss of confidence and silent diversification. Foreign nations recognize that the dominant power will never restrain its money printing, and begin quietly diversifying their reserves, buying gold, building alternative payment systems, and reducing their dependence on the failing currency. But they do this slowly and carefully because announcing their lack of confidence would trigger a panic that would destroy the value of the dollar reserves they still hold. This is where we've been since 2008. China has been systematically buying gold, building the Belt and Road Initiative to create trade networks that bypass the dollar, and developing the digital yuan as an alternative settlement currency. Russia has been dumping treasury bonds and accumulating gold reserves. The BRICS nations, representing 40% of global GDP, have been actively working to create alternative payment systems. Saudi Arabia, the linchpin of the petrodollar system, has begun accepting yuan for oil sales and publicly discussing pricing oil in currencies other than dollars. Every one of these developments represents a crack in the dam, nations hedging against dollar collapse while trying not to trigger the very collapse they're preparing for. Stage 4, the triggering event and systemic collapse. Something happens that forces the hidden rot into the open. Confidence breaks completely, and the currency collapses in a cascade that destroys the savings of everyone holding it, followed by either hyperinflation, explicit default, or in the best case scenario, a managed devaluation that still wipes out decades of accumulated wealth. We are entering stage 4 right now, and the Venezuela operation is one of multiple converging triggers that prove the system has entered its terminal phase. Let me show you the mathematical impossibility that makes collapse inevitable, and I'm going to explain it in terms so simple that you will understand why your retirement accounts so your savings and your entire financial future are in immediate danger. Imagine you have a credit card with a $100,000 limit. You're making minimum payments of $2,000 per month, but you're also charging $3,000 in new expenses every month, which means your debt is growing by $1,000 monthly despite your payments. Eventually, your creditors realize you'll never pay the principal, they'll cut off your credit, and your financial life will implode. That's exactly where America stands, except instead of $100,000, the debt is $38.43 trillion, increasing at a rate of $8.03 billion per day. And instead of making payments, annual interest payments on U.S. government debt are projected to reach $1 trillion in 2026, which exceeds the entire defense budget of the most powerful military in human history. Think about that for a moment. America is paying more just to service the interest on debt than it spends on the military that supposedly guarantees its global dominance. The increase in gross national debt over the past year amounts to $6,624 per person, or $16,719 per household, which means that while you were working, saving, and trying to build a future, the government added nearly $17,000 of debt in your name, debt that you will pay for through inflation, higher taxes, or both. And this is accelerating, not slowing down. The mathematics are brutally simple and absolutely certain. There are only 3 ways this debt can be resolved. Option 1, explicit default. The government announces it cannot pay its obligations and bondholders lose everything. This is politically impossible because it would destroy America's credibility overnight, tank the stock market, and likely trigger a global depression that would make 2008 look like a minor correction. No politician will choose this option because it means immediate, visible, and undeniable failure. Option 2, austerity. The government cuts spending so severely that it runs surpluses large enough to pay down the debt, which would require eliminating Social Security, Medicare, most of the military, and essentially every government program Americans depend on. This is also politically impossible because no politician willing to implement these cuts would ever be elected, and even if they were, the social unrest would be catastrophic. Option 3, implicit default through inflation. The government continues printing money to pay its obligations in dollars that are worth progressively less, quietly stealing purchasing power from everyone holding those dollars until the debt becomes manageable in real terms. This is the option governments always choose because it allows politicians to avoid immediate accountability while transferring the pain to savers, retirees, and wage earners who don't understand what's happening until their purchasing power has been destroyed. History shows this with mathematical certainty. Every government facing unpayable debt chooses inflation, and that inflation accelerates until either the currency is replaced or the government collapses. Rome chose inflation, debasing its currency until the denarius became worthless and the empire fragmented. Weimar Germany chose inflation, printing marks until a wheelbarrow of currency couldn't buy a loaf of bread, and the resulting desperation gave rise to fascism. Zimbabwe chose inflation, printing trillion-dollar notes that became collector's items because they had no purchasing power. Venezuela chose inflation, and now people are eating zoo animals because their currency became worthless. America is choosing inflation right now, and the Venezuela operation proves it. Here's what they're not telling you about why this happened now. Venezuela has the world's largest proven oil reserves, estimated at 303 billion barrels as of 2023, more than 5 times the amount the United States has. But Venezuela only produces about 1 million barrels of oil daily, about 0.8% of global crude production, less than half of what it produced before Maduro took control in 2013. The infrastructure is gutted. Venezuelan's state-owned oil company PDVSA says its pipelines haven't been updated in 50 years. And the cost to update the infrastructure to return to peak production levels would cost $58 billion. This operation isn't about immediate oil production. This is about controlling physical assets that have value independent of the dollar. Because when you're running a $38 trillion Ponzi scheme and the world is starting to realize, you need something of real value to point to. something that says your currency is backed by more than military threats and empty promises. The timing is critical. Brent crude slipped to about $60 a barrel, while West Texas Intermediate dropped below $58, which means oil is relatively cheap right now, but more importantly, oil futures don't trade on the weekend. So the near-term impact on the price of oil after the operation was uncertain, and the market's muted response to a military invasion that seized the largest oil reserves on the planet tells you everything you need to know about how disconnected financial markets are from reality. They're pricing an abundant supply business, as usual continuation of the system as it exists. But what they're missing is that this operation fundamentally changes the nature of the dollar system from a currency backed by global trade and confidence to a currency backed by military force and resource extraction. This is the transition from stage 3 to stage 4, and it never ends well. Let me explain what this means for prices, for your cost of living, for everything you buy. Energy is the foundation of the entire economy. Every product you purchase required energy to extract raw materials, energy to manufacture, energy to transport, and energy to retail. When energy prices rise, every price rises. More than 2/3 of Venezuela's reserves would require prices above $100 a barrel to be viable. And international investors and operators would need to commit at least $30 billion to $35 billion of capital within the next 2 to 3 years, with more than $50 billion of investment needed over the next 15 years just to maintain Venezuela's current output. Who's going to provide that capital? American oil companies, who will demand returns that justify the enormous risk of operating in a country that just experienced a military invasion, which means they'll need high oil prices to make the investment worthwhile. But here's the real mechanism that will explode prices: uncertainty and risk premium. Markets hate uncertainty, and nothing creates uncertainty like military operations that change the fundamental rules of global trade. Insurance costs will spike, shipping routes will be reconsidered. Every nation with oil reserves is now looking at Venezuela and asking themselves if they're next, which means they'll be less willing to price oil in dollars, more willing to work with China and Russia to build alternative systems, and more likely to demand higher prices for the geopolitical risk they're now exposed to. This accelerates the very dollar rejection that the operation was supposedly designed to prevent. OPEC nations are watching this. Saudi Arabia is watching this. The United Arab Emirates, Kuwait, Iraq, all the nations whose cooperation has kept the petrodollar system functioning, are now realizing that dollar dominance is maintained not through mutual benefit, but through military force. And that realization will accelerate their diversification away from the dollar. When nations lose confidence in a currency, they dump it. And when the global reserve currency gets dumped, the inflation comes home. For 50 years, America has exported inflation to the rest of the world through the petrodollar system. Foreign nations held dollars to buy oil, which meant they absorbed the currency we printed. But when that system breaks, when nations no longer need or want dollars, all those dollars come flooding back into the American economy, and the result is price inflation that will destroy your standard of living. Food prices are directly tied to energy prices because modern agriculture is mechanized agriculture. Fertilizers are made from natural gas, tractors run on diesel, irrigation requires electricity, processing requires energy, refrigeration requires energy, and transportation requires energy. When energy costs rise, food costs rise proportionally, and they rise faster than wages because businesses pass costs to consumers immediately while wage increases lag by months or years. You're already seeing this. Grocery prices have increased dramatically since 2020, and the government tells you inflation is under control, but they're using manipulated statistics that don't reflect reality. The Consumer Price Index excludes food and energy, the two things you buy most frequently, to calculate core inflation, which they claim is only 3 to 4%. But your actual lived experience is that you're paying 15 to 25% more for groceries than you were 3 years ago, and it's accelerating. The Venezuela operation guarantees this acceleration continues because it signals to the world that America will use military force to maintain dollar hegemony, which means other nations need to prepare for a world where the dollar is not the reserve currency, which means they need to reduce dollar holdings, which means dollar devaluation, which means import prices rise, which means everything you buy costs more. Manufacturing depends on energy. Transportation depends on energy. Every aspect of the modern economy depends on energy. And when the cost of energy becomes uncertain due to geopolitical instability, businesses add risk premiums to their prices. And those premiums are permanent because uncertainty doesn't disappear, it compounds. Here's the historical pattern that proves this is coming. In the 1970s, when the petrodollar system was being established, oil prices quadrupled from $3 per barrel to $12 per barrel following the Arab oil embargo, and the result was stagflation, a combination of high inflation and economic stagnation that destroyed wealth, crushed the middle class, and took more than a decade to resolve. But that was when America still had significant domestic oil production. when the dollar was newly decoupled from gold and still had tremendous credibility, when alternative powers like China didn't exist. Today, America produces more oil than in the 1970s, but it also consumes far more. The dollar has 50 years of debasement behind it. China is the world's largest manufacturing power, and the global economy is vastly more interconnected and therefore more fragile. When energy prices spike this time, and they will spike because uncertainty has been injected into global oil markets through military intervention, the inflationary consequences will be more severe and longer lasting than anything experienced in the 1970s. The Federal Reserve cannot stop this. They can raise interest rates, which would bankrupt the government because interest payments already approach $1 trillion at current rates, and doubling or tripling rates would make the debt completely unsustainable. They can lower rates, which would accelerate inflation and destroy the dollar's purchasing power even faster. They're trapped between two catastrophic options, and the Venezuela operation just made the trap tighter because it proves America will do anything, including military invasion, to maintain a system that is mathematically impossible to sustain. This is stage 4, the resource confiscation phase that precedes total collapse, and history gives us perfect examples of what happens next. When Rome could no longer pay its legions with sound money, it began seizing resources from conquered territories more aggressively, which accelerated the alienation of subject peoples, which led to rebellion and fragmentation, which destroyed the tax base, which made the currency worthless, which collapsed the empire. When Spain exhausted its New World silver and could no longer fund its imperial ambitions, it began defaulting on debts which destroyed confidence in Spanish bonds, which cut off credit, which forced more aggressive taxation of colonies, which triggered independence movements, which collapsed the empire. When Britain exhausted itself, financing 2 world wars and could no longer maintain its empire, it began retreating from colonies, which destroyed the pound's reserve status, which forced devaluation, which reduced Britain from global superpower to regional power in a single generation. The pattern is identical. Imperial overextension leads to currency debasement, which leads to loss of confidence, which leads to resource confiscation attempts, which accelerate the loss of confidence, which triggers the final collapse. America is following this script with precision, and the Venezuela operation is the clearest sign yet that we've entered the final act. Now let me tell you what this means for you personally and what you must do to protect yourself. Because this isn't an academic discussion about geopolitics and economics. This is about your financial survival over the next 5 to 10 years as the global monetary system restructures. If you hold significant wealth in dollar-denominated assets, stocks, bonds, cash, money market funds, you are holding claims on a currency that is guaranteed to lose purchasing power at an accelerating rate. The question isn't whether this will happen. The question is how fast and how severe the devaluation will be. Your retirement accounts are denominated in dollars. Your savings are denominated in dollars. Your pension, if you have one, will pay you in dollars. Every one of these represents a claim on future purchasing power, and that purchasing power is being systematically destroyed by the same government that promises to protect your interests. Total gross national debt amounts to $112,966 per person, or $285,127 per household, which means that every household in America is effectively on the hook for nearly $300,000 of government debt that will be repaid through currency debasement that steals your purchasing power silently without your consent and without political accountability. Here's what you need to understand about inflation as wealth confiscation. In 1971, when Nixon closed the gold window, the median home price was $28,000, minimum wage was $1.60, and gold was $35 per ounce. Today, the median home is over $400,000, minimum wage is $7.25 federally, but higher in many states, and gold is around $2,000 per ounce. Gold increased 57 times. Housing increased 14 times. Wages increased only about 4.5 times. This is mathematical proof that the dollar has been systematically devalued and that wage earners have been destroyed by this devaluation. If wages had kept pace with gold, minimum wage would be over $90 per hour. If wages had kept pace with housing prices, minimum wage would be over $22 per hour. The gap between these numbers and reality is the wealth that was stolen from American workers through currency debasement over the last 50 years, and this theft is accelerating. The Venezuela operation proves the acceleration is intensifying because it demonstrates that maintaining dollar hegemony now requires military force rather than economic cooperation, which means the system is failing, which means the debasement will accelerate to delay the final reckoning. You need to position yourself for this acceleration, and that means moving wealth out of dollar-denominated paper assets and into real assets that maintain value across currency transitions. First, physical gold and silver. Not paper gold, not ETFs, not mining stocks, but actual physical metal that you control, stored where you can access it. Gold has preserved wealth across every currency collapse in human history because it cannot be printed, it cannot be debased, and it is recognized as valuable across all cultures and times. When the Weimar Republic collapsed, those who held gold survived, while those who held marks were destroyed. When the Soviet Union dissolved, those who held gold maintained purchasing power, while those who held rubles lost everything. When Venezuela's bolivar became worthless, those who had converted to gold or dollars survived. The specific allocation depends on your situation, but 20 to 35% of investable assets in physical precious metals provides insurance against currency collapse. Not speculation, not trying to get rich, but insurance that your purchasing power survives the transition from the current monetary system to whatever comes next. Second, productive real assets. Farmland that produces food will always have value, because people always need to eat. Rental property that provides shelter will always have value, because people always need housing. Businesses that provide essential services will always have value, because essential services are always needed. The dollar price of these assets may fluctuate wildly during the transition, but the underlying utility persists, which means they maintain real value even as currency value collapses. Third, international diversification is no longer optional. Holding all your wealth in one currency in one jurisdiction is concentration risk that your grandparents never faced because the dollar was stable and America was unquestionably dominant. That era is over. You need exposure to multiple currencies, assets in multiple jurisdictions, and the flexibility to move if conditions deteriorate. This isn't paranoia. This is basic risk management in a world where the global reserve currency is entering terminal decline. Fourth, skills and knowledge that have value independent of any monetary system. The ability to grow food, repair equipment, provide medical care, generate energy, or deliver other essential services will have value in any economic environment. The relationships and networks you build in your community create resilience that no financial asset can provide. This isn't survivalism. This is rational preparation for a world where the monetary system that has underpinned global trade for 50 years is being dismantled by the same forces that created it. Fifth, maintain liquidity and flexibility because the transition will create enormous volatility and opportunities for those positioned to act. Having access to cash, credit, and liquid assets allows you to respond to opportunities and emergencies that will inevitably arise. The mainstream financial advice you've received, the 60/40 portfolio of stocks and bonds, the index funds, the target date retirement funds, all of this conventional wisdom was designed for an economic environment that no longer exists. That advice assumed a stable currency, manageable government debt, American economic and military dominance, and the continuation of the post-World War II order. And every single one of those assumptions is now demonstrably false. Your financial advisor continues operating as if nothing has changed because their entire business model depends on you keeping your money in the system that pays them fees. And most of them don't even understand the macro forces at play because they've been trained in theories that treat money printing as a solution rather than the problem. The Venezuela operation is the clearest possible signal that Stage 4 has begun. This is not a military operation to remove a dictator. This is not about democracy or drug trafficking. This is a $38 trillion debtor nation seizing physical assets because the currency backing those debts is collapsing, and something of real value is needed to maintain even the illusion of solvency. Every empire that has followed this path has collapsed. Rome collapsed, Spain collapsed, Britain collapsed. The Soviet Union collapsed. America will collapse. Not because I want it to, not because I'm rooting for it, but because the mathematics are immutable. The historical pattern is absolute, and the four-stage cycle has never once been broken by any civilization in human history. The question is not whether the dollar system collapses. The question is whether you'll be prepared when it does. You have time to act, but that window is closing rapidly as the triggering events accumulate and accelerate. Move assets into physical precious metals while they are still available at prices that will seem absurdly cheap in retrospect. Diversify internationally while you still can without capital controls. Position yourself in productive real assets that will maintain value through the transition. Build skills, relationships, and resilience that will serve you regardless of what monetary system emerges from the collapse of the current one. This is not about fear. This is about recognizing mathematical realities and historical certainties. The empires fall, the currencies collapse, and the only question is whether you will be among those who prepared or among those who trusted the system until it failed them. The Venezuela operation is your final warning. The four-stage pattern is playing out exactly as it always has, and we are in Stage 4, the resource confiscation phase that precedes systemic collapse. What comes after is uncertain, but what is absolutely certain is that the current dollar-dominated system is ending. The mathematics guarantee it, the historical pattern confirms it, and the military invasion of a sovereign nation to seize oil reserves proves it. Act now while you still can, understand what's happening while the majority remains oblivious, and position yourself for the transition rather than becoming a victim of it. This is not a drill. This is the main event, and it's happening right now.